to be 35 and retired. It's not impossible, but you need to make the right strategy to make this plan happen. Sure, you can even be a millionaire before you reach 20, amass enough cash to carry you through your whole life. But even the Jordans and the Zuckerbergs of this world made sure their assets continue to generating income. That's the key. You gotta make your money work for you. Putting away cash thinking it will be enough in the end won't do it. There's inflation. The ever-present possibility of an economic crash, or as COVID-19 demonstrated, a global pandemic. You need to implement a series of strategies to retire early. But it is possible, and below are 8 simple strategies to help you do that. First thing and most basic thing is consult a professional financial advisor. Whatever I say here is just for informational purposes only. It is meant to be part of a bigger research you need to do for yourself, so contact a professional. Second thing you need to do is be clear on what your timeline is. This is important because your planning will change dramatically if you plan to retire in 15 years, maybe 20 years. The more luxuries your pre-retirement life requires, the longer the planning phase will need to be. I know that seems obvious, but sometimes you have to point out the obvious. So make that decision now, what's important for you. Number 3, know your early retirement target numbers. This is where things start to get technical. You need to calculate the income you'll need to amass to get this early retirement. Determine your actual living expenses, factor in inflation. You'll need to assemble records from all your spending accounts for at least the past 12 months. Go through those expenses, separating the ones you expect to continue in retirement, but eliminating those that will no longer apply. For example, you know you're going to need to pay off your house, or you're going to have a housing payment. But if your plan includes getting out of debt, maybe you don't have a car payment, maybe you pay the car off. Or do you include the house payment because you haven't paid it off? These are all things that you have to think about. And you also think about having to reduce your expenses. Number 4, take inflation into consideration and emergency funds. Due to inflation, your retirement portfolio target number is likely to rise before you reach your desired retirement age. There's no accurate way to predict what the cost of living will be in the future, but we can get some guidance and you can kind of look at the past to gauge that. Let's say your planned retirement early date is 20 years from now. If you use the Bureau of Labor Statistics CPI inflation calculator, we see that it takes $1,495 in November of 2020 to buy what $1,000 would have bought in November of 2000. This translates into an inflation rate of about 2% per year. If you've determined that $1.25 million in your retirement portfolio, based on today's price levels, you'll need to increase it by 50% to anticipate higher prices in the next 20 years. And this is consistent with the past 20 years. Number 5, determine the retirement portfolio needed to generate your target income. Never make the mistake of concentrating on only a few assets. You need to spread your investments and determine what role each asset plays. Number 6, insurance is a big thing. Whether it's health insurance, travel insurance, life insurance, and others, you need to put that in your target and also in your portfolio. Number 7, you gotta protect all of your investments. Dividend paying assets can be risky, but you're gonna need some of those. The only thing you have to do is you have to make sure you protect some of those. You have to have a safeguard. The best way to do that is precious metals, because those are a great inflation hedge and they're very stable. Gold is one of the assets that thrives during economic turmoil and remains consistent for the rest of the time. It's a great store of value and it's one asset that will keep you safe as you venture into more risky investments. The truth is that early retirement is a major long-term investment commitment and you'll need to be ready to make those kind of sacrifices. Remember though, it's not impossible, but the sooner you start preparing for it, the better it's going to be for you.
If you're interested in investing in precious metals and you want to talk to a no-hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.